Big companies are always dropping clues about what they're planning to do next, and you really don't have to be a Wall Street pro to figure them out. These hints are kind of hidden in plain sight, right inside their financial forecasts. So, over the next few minutes, we're going to decode one of these announcements together and find a key signal that might just change how you see a company's future. Let's jump in.
All right, so you've probably heard this term financial guidance thrown around all the time, right? Especially when companies are announcing their earnings. But what does it actually mean? I know it sounds super technical, but I promise the main idea is actually pretty simple.
So, when you boil it all down, financial guidance is basically like a company giving itself a report card for the future. They're putting specific numbers out there, laying out their goals for how much money they plan to make, and how much profit they hope to earn. It's them telling investors, hey, this is what we're aiming for. Okay, let's get into the actual numbers from this specific announcement. We're going to be looking at their goals for the third quarter of 2025. These are the big, splashy numbers that usually grab all the headlines. First up, we've got revenue. That's the total amount of cash the company thinks it'll bring in through the door. And you'll notice they don't just give one solid number. They give a range, right? From a low-end guess of $1.725 billion to a high end of $1.85 billion. This gives them a clear target, but also a little wiggle room because, the future is never 100% predictable. Next, let's talk profit. They use this specific term here called adjusted EBITDA. Now, that sounds way more complicated than it is. It's really just a way of looking at the company's core profitability before you take out things like interest and taxes. And just like with revenue, they're aiming for a range here, somewhere between $60 and $80 million in profit. And finally, they give us an estimate for the number of companies' shares out there. That's another key piece of the puzzle for financial models. But here's the thing. These big headline numbers, they're important, sure, but they are not the most interesting part of this forecast. Not by a long shot. For that, we got to dig a little deeper. And this right here is where the real story begins. If you look past the big, flashy numbers, you can often find a little detail that tells you so much more about where the company is headed. And in this case, it all comes down to how they pay their people. So we need to get this one term down, stock-based compensation, or SBC for short. It's basically the cost of paying employees with company stock instead of just cash. And for a lot of companies, especially in tech, this is a huge, huge expense. So the company says this particular cost is going to be somewhere between $55 and $60 million in the third quarter. That's a little bit of a bump up from the $55 million it was in the quarter before. Now, you might look at that and think, okay, whatever, a minor detail, but it's not. This is actually the setup for the most important piece of information in this whole announcement. Because here's the secret. The real story here isn't about that $55 or $60 million number at all. No. The really crucial detail is what the company said is going to happen after the third quarter. This is it. This is the turning point for the entire forecast. It's a signal that one of the company's biggest expenses is about to hit its absolute highest point, and then, finally, start coming down. The golden nugget is right here, in this quote. They come right out and say it. The expense level in Q3 will be the peak. Think about that. That's not just a number. That is a massive statement about where their costs are going in the future. And this visual just lays it out perfectly. You can see this major expense hitting its peak, its highest point in Q3. But then, look what happens. In Q4, it starts to go down, and it's expected to keep on decreasing into the next year. This is exactly the kind of positive signal that smart investors are looking for. So let's just pull this all together. The company pointed to a major cost, told the entire world it's about to hit its peak, and then promised that it's going to go down from there. This one tiny detail signals a huge positive shift. It means that down the road, more of the money they make might actually turn into real profit. And that, my friends, is the real story hidden inside the numbers. So that leaves us with one final thought. When a company basically announces that it's finally getting a huge expense under control, that it's putting it on a downward path, how does that change the way you think about its value over the long run? It's a really powerful idea to keep in mind the next time you're decoding one of these forecasts.